So, a $200 price for silver, is that just wild speculation or is it actually a scientific forecast? Today, we're going to dig into the argument that a bunch of powerful, measurable factors are converging to create what could be a perfect storm for silver. And we'll look at it all from the perspective of a smart, risk conscious investor. I mean, it all starts with these really bold predictions, right? This isn't just hype. It's a claim that something fundamental is shifting in the silver market, a shift that could honestly rival some of the most dramatic market events in history. So, what's really behind this incredible claim? And that really brings us to the core question here. Are we looking at a carefully built, evidence based case for a historic price move? Or is this whole thing just the latest speculative fever dream? We're going to break down the arguments for and against, piece by piece. All right, so here's our game plan. We'll start with the thesis itself, then get into the core dynamic of demand versus supply. We'll look at the so-called perfect storm of big picture catalysts, check out the chart as a possible roadmap, and then, importantly, we'll do a reality check on the risks and counterarguments. Okay, so the first pillar of this whole thesis is the simple stuff, demand versus supply. The entire bull case for silver really kicks off right here with this basic physical mismatch between what the world actually needs and what miners can dig out of the ground. So this is the number you really need to remember, 6. According to the Silver Institute, we're looking at the 6th straight year of a structural supply deficit. And look, this isn't some one-time thing. It's a chronic problem where demand has consistently, year after year, been higher than new supply. But what's really fascinating is why it's so hard to fix this deficit. See, silver supply is what they call inelastic. About 70% of all new silver is just a byproduct of mining for other stuff, like copper or zinc. That means even if silver prices went to the moon, miners can't just flip a switch and make more. They'd have to kick off these huge multi-year mining projects for something else just to get a little bit more silver as a bonus. It's just not that simple. And this is just a perfect picture of the other side of the equation. Because while supply is stuck, demand is getting hit from two powerful sides. On one hand, you've got these unstoppable industrial trends. Think solar panels, electric cars, 5G, that all need silver to work. And on the other, you've got a growing wave of investment demand from people who just want a safe place to park their money, a hedge against inflation. It's like a classic pincer movement, squeezing this very limited supply from both ends. All right, so pillar number 2, the perfect storm. Beyond that basic supply deficit, analysts are pointing to 3 massive global events that are all converging, and they could act like rocket fuel for the price, potentially creating a real supply vacuum. Okay, so first up, you've got China. They're a huge player in silver refining, and they're apparently cracking down on exports because they need all the silver they can get for their own massive solar and EV industries. Then, you have these new Basel III banking rules, which are basically forcing banks in Europe to swap out their paper silver IOUs for actual physical metal. And finally, there's the Fed's policy of a weaker US dollar, which just makes holding hard assets like silver more attractive. Okay, on to our third pillar, the chart as a roadmap. Now that we have the fundamentals and the macro stuff, let's look at how technical analysts are seeing the price chart. And for them, it's not just a history book, it's a potential map of where we're headed. You have to understand, for more than 40 years, that $50 mark has been like a brick wall for silver. It got there for a moment in 1980 and then again in 2011. It's created this huge psychological barrier. But here's the thing in technical analysis. The longer you hold a spring down, the higher it's going to jump when you finally let go. So, what analysts are seeing is that this whole 40-year period is forming this giant technical pattern called a cup and handle. Think of it like this. The cup is that long, slow, U-shaped bottom where all this buying pressure has been building up for decades. And the handle? That's the more recent, smaller dip. It's like the final shakeout before the big launch. And this is exactly where those big numbers come from. By literally measuring the depth of that 40-year cup, analysts are projecting an initial target of around $100 to $120. If the pattern plays out completely, well, that's when you start hearing about those even higher long-term numbers, like $150 to $200. Okay, wow, that is a seriously bullish case, right? But we're looking at this as smart, risk-aware investors. So we absolutely have to flip the coin and do a reality check. What could go wrong here? What are the counterarguments? Well, the biggest risk, and JP Morgan's head of metal strategy points this out, is substitution. Silver is an industrial metal, and if it gets too expensive, industries that need it are going to find a way to use something else. The solar industry, for example, They're already working hard to use less silver or replace it. A huge price spike could just throw gasoline on that fire, and you'd basically destroy one of the key pillars of long-term demand. And this chart really just lays out the dilemma perfectly. On one side, you have a big bank like JP Morgan with a pretty sober forecast, seeing silver average around $81 in 2026. And on the other side, you've got that ultra bullish case we've been talking about, aiming for $200 plus. I mean, the gap between those two is just enormous, which tells you there's a huge range of possible outcomes. And you just have to remember, silver is what traders call a high beta beast. It's known for being incredibly volatile. That potential for huge rewards, it comes attached to some serious risk and price swings that can be absolutely stomach-churning. And look, this is not just some theory. Here's a real-world example. Back in January 2026, when a more hawkish Fed chair was nominated, boom, silver crashed 27%. That's a massive drop, and it just shows you how fast the mood can change and how sensitive the price is to what's happening in the wider economy. All right, so let's pull all this together. The bull case, it's standing on three really strong legs: that long-term structural supply deficit, the perfect storm of macro events, and that massive 40-year technical chart pattern that looks ready to break out. But the bear case is just as strong. Silver is crazy volatile, sky-high prices could kill industrial demand, and, the big banks are forecasting much, much lower prices. Which leaves us with a big final question, right? We have this historic setup clashing with some very real, very significant risks. So is silver really on the verge of a complete paradigm shift that's going to revalue it for a whole new era, or is this all just the setup for another painful, classic silver pullback? The evidence on both sides is pretty compelling, and that leaves every investor to decide for themselves which one of those forces is going to win.